Hi everyone, and welcome back to another Brooks Price Action weekend market update. My name's Tim Fairweather, and today I'm going to be covering a weekend update for the FTSE 100 futures. The FTSE 100 futures on the monthly chart. We're just going to take a look at the higher time frame. So you can see here, this indicator is just highlighting 3 consecutive bars. So at the moment, we've got 3 bear bars. You can see we haven't had 3 bears on the chart since back here and back here. So I think the likelihood of this being a bear bar is low. But in terms of, that's in terms of the price action that's been repeating so far. However, the moving average is still far below. So there is room to the moving average if you're a bear, but it's going to be less than 1-to-1. So it's a scalp. And I'm not really interested in scalping back to the moving average. On the monthly chart, we had these 2 measured moves that we reached. So we had the COVID crash, double bottom, bull spike that took out the high of that bear spike, pull back. This is a pullback measured move, 1. And then you can see we had this small gap in here, and that was another measured move that we've been hovering at for the past few months. So the target for the bears is probably this prior breakout point and around this area. We are at 8,000, and I think we might go sideways here for a while as the market decides whether 8,000 is going to be the pause or whether we're going to close this gap. The bears obviously see a wedge top, 1, 2, 3, and they're expecting a couple legs sideways. So that could be on the cards for early next year. But at the moment, it's been all bullish, lots of open gaps. I'm not sure if this is a strong enough second leg from this. Sorry, let's start again, too much writing. This is a strong spike. If this is going to be 2 legs sideways, the bulls are more likely to get a second leg up. If that's the case, and this is consecutive bear bars, the bears might get a second leg sideways, and the bulls will get their second leg as well. So expectation, the month's still got 2 weeks to go. I think we're going to go sideways here. The advantage the bears have is they've got a smaller stop. If I'm a bull, I've probably got a stop down here at the breakout point, betting there are going to be buyers down here, but there's nothing to buy on this chart. So that's the monthly chart. FTSE 100 on the weekly chart, you see I've got bear micro channel sideways at 8,000 prior breakout point. So a couple of things going on here. You can see we've got the prior breakout point back here, which we've been testing. And we've also got the 8,000 big round number, which we've tested once. I think we're going to go and test it again. The bulls had open gaps here and an open gap here. You can see I've got a measured move. We reached that measured move and went sideways. Now, one of the problems the bulls have is that once you create a gap above a breakout point, traders are wondering whether this breakout gap will turn into a measuring gap. You can see here, this gap became a measuring gap. So first gap and then second gap. If that's going to be a measuring gap, then the target's going to be up here. But so far, there are no buyers in this area. If this closes underneath that breakout point, that's a real problem. That becomes a measuring gap, and then the targets will become any gap that's below this price. There's one there. There's one down here. I'm not sure we're ever going to get to it. The 200 has been acting as support, so I don't think we're going to get that far down. But there is one more gap. So that's looking at the charts from a gap perspective. What do the bulls see? Well, the bulls see very strong spike, a couple legs sideways. They've got an expanding triangle here. There were buyers below the moving average here. There'll probably be buyers somewhere down here. But the problem is the bulls don't have a buy signal yet. So if you're buying underneath these bear bars, baiting the breakout, your stop is far away. Is your stop below that doji? It probably needs to be below this gap, but I think most traders are better off being short. It's always in short. We had a reasonable signal with follow through. You could have sold on a test here, sold on a test here, and now these bears have got a follow through bar here. So if you look at that, if you sold that bar there, you say, okay, that follow through is disappointing, but it's still a bear bar and it's still triggered in the short. And that means if we go up here, it's more likely to come back to this point as well. On the other hand, if I'm a bull, we broke out of this range here and we're coming back in here. I prefer to wait for the bears to fail before buying. So always in short, probably sideways to down coming into next week. It's not a great stop entry sell here. You're either short or flat. There's more likely to be sellers above the high of that bar as well. So I'll be looking to sell and sell at the moving average if we get back there. The other limit order buy would be from 8,000 and below, just scaling into buyers here and probably, a couple of hundred points lower near that gap, betting that we're going to come back up into this range. Okay, FTSE 100 on the daily chart. You can see I've said 3 legs down to 8,000, measured move target in a tight bear channel. I've got the indicator showing consecutive bars so you can look at how spikes operate in a trading range. So I said traders would buy the 200 moving average. I was a buyer at the 200 because it's been a reliable buy signal for many months. And so I had no reason to expect it not to be. I didn't hold it for very long because this is a strong bear spike. And if you're buying or fading a strong bear spike, first of all, you need a stop that's down here. Secondly, if you get a good entry bar, you're really expecting two legs sideways to up. You're not expecting a reversal here. So it's more of a scalp trade. And when I saw that there were tails at the moving average, then I got out at the moving average. We went below a bull spike. We had a new breakout with a new gap. And you can see I've drawn a measured move here because now we've got a gap. Is that going to become a measuring gap? Well, if you have a whole bunch of tails there, there's a good chance it is going to act as a measuring gap. So I was short last week because I thought we might get down at least to close this gap, which we did. And then we actually went all the way down to 8,000. Now we're at 8,000, which was my target. The question is, what do you do here? Well, you've triggered, if I'm a bull, you've triggered quite a few bull bars. You've triggered above that bull bar, and this bull bar. So bulls are in the market, and that means that there's going to be buyers below bull bars and scaling in lower. My problem with being long here is that because there are gaps basically every 100 points down, I don't think it's strong enough for me to be long. I prefer just to be selling two-legged pullbacks to the moving average. The moving average is up here. I prefer to be a seller above this bar. And then if I get stuck, I should be able to get a chance to get out of the moving average. Otherwise, it'll be a good short down. Because it's a trading range, it's likely to just go all the way to the target and make that trade, I think, difficult to get into. But you can see if a bear sold below that bear bar or sold in that gap in the middle, if a bear sold the close of that bear bar or one tick below, they had a chance to get out disappointed. If they sold in that gap, they're still in that trade. I think there'll be more bears selling above that bar. It's still a tight bear channel. And even if the bulls are able to get a two-legged move up, I think it's more likely to go up and then sideways into a trading range. One thing that's important to notice is that this bear bar did not trigger and this bear bar did not trigger. And that's a warning for bears not to sell low. It's more likely they're going to sell up in the top part of this channel. I've got a channel line drawn. And you can see right down the middle is where we're hovering. So we were up in this range. It was basically a small measured move. It can often end as a climax and then come back up to the top of the channel and then come back to the middle. That's one possibility. Or the angle of this changes into more of a slope like this. So always in short, better to be short or flat. I think this is going to turn into more sideways. We're around 8,000 magnets. We've closed that gap. The bears would really like to get down to 7,900 to close that gap or 7,785, but we're starting to come down into a long-term investor area, and traders and bulls will be beginning to scale in down there. Hey, so thanks very much for watching. That was the weekend market update for the FTSE 100. Happy trading, and I'll see you next week.